Hi and welcome to another episode of Startup Stories, where I interview the best and brightest startup founders and experts so you can be ahead of the curve with your own startup venture. This episode brings us together with Alain Nicod, a business angel, founder of various startups like LeShop in 1997 and partner at VI Partners. Alain likes searching for startups and meeting exceptional people, and he believes it's important that an entrepreneur can manage the day-to-day firmly, be realistic, and have good sales skills. In this episode, we start off by exploring what he enjoys about being a partner at an investment fund of over 100 million Swiss francs, and what he misses about being on the other side. We then dive deeper into questions around how a fund works, what the returns on investment have to be, how the process of launching a fund works, what skills are needed, and more. Finally, we asked Alain for specific advice that we could apply to our own situation, how we could detect a good from a bad investor, and what he looks for in a founder. Having Alain on the show was a delight, and I'm excited to share this conversation with all of you today. Enjoy! Yeah, so maybe we can just jump right in.
Okay, perfect.
I think
with pleasure.
Most importantly, thank you for taking the time. We really appreciate it. You must be a busy person.
A pleasure.
Maybe we can start by you telling us and our audience who you are and what you do, just as a start.
Okay, so my name is Alain Nicod. I'm born and raised in Lausanne area. Started doing some business studies and worked for serious companies like Arthur Andersen and McKinsey. Mm-hmm. And then I left to become an entrepreneur. I spent 13 years being an entrepreneur in various shapes and forms. A few known companies are Compex. It's a muscle stimulation device that is used by top sportsmen. That was a company I was a majority shareholder of for almost all of that period. Then I started LeShop, an internet grocery company that went through all kinds of ups and downs, but was a very, very exciting and fun project. I was also involved in the creation of various companies in the nascent wave of internet and telecommunications in the mid-90s. I'm still chairman of one of them called VTX Telecom. It's a company in Lausanne doing telecom services for KMUs, for small and medium-sized enterprise. And then in 2002, a change in my life. I came across a venture incubator, actually some of its shareholders, and they asked me to join and try to do something with that fund that was not doing too well. So I joined end of 2002. We put a team together very quickly, 4 people, we're 4 in total, 4 investors plus 1 person taking care of admin. And since 2002, we've been running that fund. Our mission is to support early stage companies in Switzerland. Mostly they are university spin-offs. I would say half is in Deutschschweiz, half is in Westschweiz, and half is in life science in general, so medtech, biotech, and all the rest, and half is in IT, material science, and the rest. So that's where we are. Otherwise, on me, I have 3 children that are not children anymore. They're grown-ups. I'm going to soon be a grandfather, which is a great news. Should happen anytime.
Nice.
And I still have two of my children that are doing studies, PhDs or masters, and some are considering starting their company. So it's very funny to see the kind of legacy one that gives. So that's where I am. And I share my time between Lausanne and Lausanne and Zurich. That's where I spend most of my time.
Right, and you bring your foldable bicycle.
And that's the best way to travel around Switzerland. It's very funny because it creates all kind of hassle with the SBB. SBB considers that a foldable bike is a bike, so they want me to pay something for the bike. And I say this is not bigger than a luggage, so we always have arguments. It puts a bit of color on my travel, so I like it.
Always exciting when you get on a train.
I'd love it.
What do you enjoy about being a partner at an investment fund?
What do I enjoy? I mean, I like, for me, the highlight is really the relations with the CEOs of the companies we finance or the ones we consider financing. I think they are, in general, wonderful persons, very interesting people, driven, visionary, want to do something different, want to save the world. I mean, there's all kind of shapes and forms on the way they do it, but in general, they're very interesting people. So I really enjoy seeing them and interacting with them. So that for me is the biggest joy. The other big joy is to see companies, for those who are successful, and they're not all successful. We can talk about numbers later, but for those who are successful, to see them build up teams and do some, and build up a real organization, a real service, and have a real impact on the industry they've chosen. Right. And I think it's a real joy to be part of that kind of game.
Yeah.
I also enjoy the fact that investors trust in us. It's a big act of faith to give a team like us a big check, actually, and say, run it and do the best out of it. I think we're doing okay, so I feel okay versus that, but I'm very grateful that some people considered giving, trusting us with those kind of numbers.
Right. Is there anything, now if you compare your work now to the times where you were a startup entrepreneur, is there anything you're missing? Is there any dark sides of the of the job?
Sure. I mean, there is undoubtedly. I don't have as much excitement as I used to have as an entrepreneur. When you land a client, you land a new contract, you land a financing round, you land something. It's mega exciting, and I'm one step or two steps remote from those events. Yeah. And sometimes I have fun with the entrepreneurs. Say, you call me when you have problems, but when you have a good news, you don't call me. So please do at least 50-50. Don't just call me when you can't pay the salaries at the end of the month. But joke apart, I mean, it's really part of the thing. You're not as close to the operation as you are as a CEO, which is normal. I mean, it's not our job to interfere into operations and into the day-to-day of those companies. So I miss that, frankly, and I miss the fact of leading a team of young people that are motivated, that want to conquer the world and whatever. I mean, it's a different dynamic.
Yeah.
But I don't think. On the other hand, I'm now 58, and I don't think I would be a great entrepreneur. Yeah. I think to be a great entrepreneur, you need to be younger than that.
Why is that?
I think there's that dose of craziness, that dose of let's try it, do it, fix it, which after a certain time you may not have anymore. At least if I look at the numbers, I mean the relevant numbers of the companies I've been involved with, either by VI or personally, which is in between around 60, 70, 80 companies, I don't know exactly, but that's the kind of number. I've not had one single outlier success with a 50+ entrepreneur. None. And I would even put it the other way around. All the outlier results, I mean, the ones who were really extraordinary, were started by people that were in their 20s. Doesn't mean the success came in their 20s, but they started that when they were in their 20s. So yeah. I think there is something to it. I haven't seen any statistics, but at least in the relevant sample of my companies, this is clearly what I've been observing. And it probably has to do with that craziness aspect.
We're very lucky to have started then ourselves.
Yeah,
that's very good. That's very good. You didn't start too late.
That is true.
How do you? I mean, you said and shared you were grateful for the check that you received, and in a sense, your own startup as well. Someone gave you money, and you have to make something out of it.
Yeah.
How do you manage how is that? How do you manage the pressure? How do you sleep at night? Because those are extremely big checks. Yeah. How is that?
Actually, first of all, I'm not a very good sleeper anyway, so and it has nothing to do with the money I have to manage or not. So But having said that, I mean, if I try to take away that element, that bias, which is I'm not a good sleeper, what makes me a good sleep or a better or worse sleep, is I think it's do I feel I've been acting responsibly? I think that's the most relevant thing. I mean, that we make money or lose money, well, that's the result of our work. And I can live with both, and I take the responsibility for both. I feel bad if I think I've not taken a decision or taken an action that was done in a responsible way. And it can happen, and that keeps me sleepless.
Yeah.
But if you did your best, you did it in good faith, then that's it.
Yeah. I think that's extremely good advice for also startup founders out
I think
there.
so. I think so.
Really be responsible, have
Have
integrity, and
exactly. And that the thing doesn't turn out nicely, it can happen. Shit happens in life.
Yeah.
That's okay.
Yeah.
I think that it's not okay if it's not done responsibly. So I would say that's probably the best the best criteria for good sleep, bad sleep.
Yeah.
So, but the expectations of the people who give you the money are 10x or higher, right? Why is that? Why is
No,
this?
it's not. I don't think they have. I mean, maybe they have and they don't tell me. They never told me we want 10x. What you try when you invest in a company to do a 10x because of the numbers involved. We've had historically 50% failure rate, 50. That means in half the cases you lose money, part of it, all of it. I mean something. I mean, it doesn't work. And then you have the rest. And if you want to return a 2-3x to your investors, which is a perfectly acceptable number nowadays for a fund, not an individual investment, some of them will do a 1.5, 2x. So you need a few that do 5 to 10, or better even. I mean, obviously, if you can do a 50 timer, it's not bad. But and nobody's going to forbid you from doing that. But you need to have a few of those outliers that pay for the fund. If you look at our performance, we've more or less doubled historically on the companies with a half, half of the companies going under or not performing. And if we look at our performance, we have actually, out of the 25 companies we sold, 25-ish, I'm not sure it's the exact number, I think there's 3 that pay for 80% of the profits, or 4. I mean, that's the kind of number. I don't have the exact concentration, but it's a relatively strong concentration. And I think in Switzerland, we haven't seen yet a lot of those outliers, the 20, 30, 40 timers that skew the system even more. We might start seeing some now because the ecosystem is I think working better and better. And if you look at the US funds, a lot of them have actually a skew that is even bigger. So you need to make sure that you have a few of those outliers in your portfolio. You start with the hope that 100% will be so, and you end up with the fact that 10% are so. But
are there also funds failing because they never find the outliers?
Yeah, sure.
Does it happen? Or
if you look at the performance of the great names in the venture industry, they don't have less failures than others. What they have more outliers than others. That makes a difference. The failures, you will have them anyway, and you have to live with it. You just have to make sure you minimize the losses in the failures, but you need to have some of those outliers. So when you invest, and I think we did a few mistakes in the beginning of our career here, to say, okay, we'll aim for 2 and 3, and it will be nice. And actually, that's a bad idea. It takes too much effort. The risk reward is not good enough, so you should avoid those things. And really go for every single deal should be an outlier, and then it ends up not being so, for sure. But at least you have a few that, if you land them, then you have your performance.
Mm-hmm.
What's your when you invest in a startup? What's the time frame that as a fund you wish a return on investment? Is there anything like that?
Obviously, you have hopes, and you can have a few ideas. You try to say in 5 years, I'd like to get my money back and my multiple. In reality, we are at an average duration of 7 years-ish. Maybe a little bit lower, maybe a little bit higher, I don't know, but we're at around 7. In my personal portfolio, I'm also around 7. So that seems to be a number that works pretty nicely. But again, the 7 is an average, and it's made out of very big extremes. We've had a few real success stories very early, 1-2 years. You can be lucky. We have a few companies in our portfolio that are dragging their feet big time, and we're there since 12 years and nothing is happening yet. So there's a bit of everything. And then you can also say that you tend to see pretty quickly also the bad ones. So the companies where there's a mistake, there's something wrong in the system, what it's the team, the idea, the IP, whatever it is. Some fail pretty quickly, so you see those come out very in the first 2-3 years, and then decide what to do. So the 7-year average is made up of many different things, and I think it is fundamentally wrong to set an agenda, even if we as investors have a responsibility to our shareholders to say we're doing a 10-year fund or whatever it is, whatever the terms of the funds are. You need to have the discipline to say I need to sell the companies within a time frame. But to say I need to sell this and that company in 2021 is wrong, because maybe in 2021 the company will not be ready, there will not be a buyer, and if there is no buyers and you try to push a sale, you get nothing. So it's funny because we do every quarter an estimate, not only the Buchhaltung, the accounting estimates of the portfolio, but we do an estimate what the company will be worth one day. And we've stopped putting a day. We just say that or that company will be worth X millions and our share Y millions. And that's the only statement we give. We started by putting dates, but that was so wrong that we stopped. It was a shame. And the fun thing about it is that if we look with hindsight, 1 year before selling our companies, so every single company we sold, and we sold 20 odd companies, and we take our estimate of the price we got, it's 5% off to the lower end of what we actually got in average. So we're pretty good at forecasting.
Yeah.
We're pretty good at forecasting
The
what
value.
we're going to set the value,
Not the
but
time.
we've been awfully wrong in the time. Awfully.
I think that's a human thing.
I don't
Predicting
know.
the future.
You reassure me that I'm a
It's-
human, I'm not a machine.
Yeah, it's
Thank
it's
you.
impossible.
Thank you. I
We all-
appreciate
We all believe we can predict the future, but it's not
Doesn't
possible.
work.
No. Yeah. How high do the returns for a fund need to be to be able to open an additional fund?
I would say you should return 2x to your shareholders. That's a good measure.
Yeah.
It's more a multiple than an IRR. I mean, I think it's different. I mean, if you're in the leverage buyout or in the financial world, they calculate a lot in IRR because it's very relevant in their case. Time is money, and they need to make sure that the companies perform very quickly. In venture, I think the IRR is obviously an important measure, but the biggest measure is a multiple.
Yeah.
So I would say if you have a 2-timer, then you can start talking. Below 2 times is a bit difficult.
How would you? We wanted to explore a bit more. The whole process of launching a fund. Who's involved? What has to happen to open it? How would you go about launching a fund? What are some of the activities that you would have to do?
Well, the first thing is you need to have a team that is well-rounded. Those investment decisions are not simple to take. So you're well off if you have a team that can complement each other and have different views on the companies, on the investment opportunities, on the decision to be taken. I think it's important to avoid this kind of self-fulfilling prophecies, where everybody agrees on something, say yeah, go or not go, and that, I mean, if you don't have a challenge, then it's why have a team and do it on your own. So first of all, is to put a team together that manage to put those challenges in, and by definition, then it's not simple to put a team together that challenges each other, because it's nice to have people that just reassure you, say, yeah, you're good, you go. It's always a bit more complicated to have people that will say, well, I'm not sure this is a good idea, and why do you want to do it, and why should we do this, and why should we do that? So putting the team together, and then obviously go out and fish for some money. We're doing now we're starting fundraising for a new fund. We've decided that very recently. It's the first time we do that, because VI was given to us. I mean, we didn't fundraise; they came to look for us, so that was a different experience. So I'm doing that for the first time in my life. I mean, it took me a long time to get to do something for the first time again. And you need to have the good team, and then a good story. You know, what is your investment thesis? What are you going to invest in?
Right.
And why can you claim you are the best in investing in that kind of stuff? And what's your track record? And
it's like a startup.
It's like a startup.
It's like a startup.
Sure. At the end of the day, it's like a startup.
Yeah. What you say? You put a team together that complements each other. So personal views, obviously, and types of persons. Is there also different skills that are needed?
Yeah, sure. I mean, then the know-how in specific things. I mean, for instance, in our case, we have two of the partners are really life science related people, and two of the partners are more IT and material science and whatever. And then we have two younger people who joined the team who are great. One also in life science and one in IT. And I think they bring their different views on the things, and I think that has a lot of value.
Yeah, definitely. If someone wants to start a fund, I mean, you're probably, the size of your fund is going to be different than from someone who starts
Sure.
it, who has less experience, has a different team. What's the minimum size that
I don't think there's one answer to that. I mean, there is. I think the fund should provide enough diversification for the investors, but also enough concentration that if one works, it really matters. So I would say 10 to 15 lines in a fund is the right number, probably. And then if you take 10 to 15 lines, depending on what you want to do, you need to say, I'm going to invest in average 5 or 10 or 2 or whatever, and then it gives you the size of your fund.
Yeah.
If you're doing growth financing, you may need 20 million per pop, so you need a 300 million fund, or else you're nobody. If you want to do seed funding and God knows what, then you can go with less. If you want to do biotech seed funding, you need more than if you do IT seed funding. So there's a whole kind of different series, you know.
Yeah.
So I don't think there's one answer, and then the business model has to make sense in terms of being able to pay the management team properly.
Yeah.
So that there is also a few maths to be run on that one.
Is it still the 220
Yeah, the 220.
model?
The 220 is a norm.
Yeah. Okay. All right. We were discussing some questions for founders, questions that we hear a lot.
Yeah.
Also questions that happen to us and that we can't answer ourselves. So we thought we'd exploit this situation and ask you for your advice. One situation is, especially in Switzerland, it's not easy to just go without money for long. So the costs of living are very high. And a lot of people have side jobs or full-time jobs.
Yeah.
How would you recommend, let's say there's 2 or 3 founders, the focus of job versus startup?
Yeah.
So there's a situation, there could be, I know a startup that has 3 female founders, 2 are working full-time on a paid job and 1 is working full-time on the startup.
Yeah.
Then there's startups where they work part-time on the job. And
Yeah, sure.
do you have any experience with that, and what's your
I would
view?
have a few thoughts come to my mind. The first one is, I think it is important to be thoughtful about asymmetric things in a team. If one works full-time at a bank or at EPFL or at ETH and whatever, and the other one is a full-time in the startup, it is not unlikely that at some point in time there will be tension, saying, "What the fuck are you doing? You're having that comfortable job, and I'm working my ass off," or vice versa, or I'm working, I'm giving half my salary to the company, and you can't get things done. I mean,
I see what you mean.
So I think those asymmetric things are dangerous. They're feasible. I'm not saying they're not to be done, but you need to be thoughtful about them. I would say that's the first point. And the second point is whether the company itself, the company that is being created, justifies big investments or not. I mean, in my opinion, there's a lot of companies that don't justify big investments, which is not necessarily a bad news. I'm not saying, it's only companies that need big investments that are great companies and all the rest is crap. It's really a matter of saying, what is the value of my independence versus the value of having a lot of money to go faster and further and whatever with my company. And in some cases, you're better off not having investors putting undue pressure onto you, and to be really independent. And independence is a great thing in life. Yeah. It's a great state of being. And if you have VC money, you're not independent. Mm. So first question is the asymmetric behavior, and the second one is, do you really need venture money? And if the answer is no, then figure it out. Find your side jobs and God knows what. Find a way to pay the bills. And frankly, I would recommend, if there is a doubt that VC money is a good idea or not, try to work without VCs and work with customer money. I mean, for sure, customer money is cheaper than shareholders' money. Mm. So if you can, if you can have a few customers paying for your stuff, I mean, it's better. Yeah. And then if you have a real big idea that justifies a lot of money, then raise the money as soon as possible and stop all kind of side jobs, and that doesn't work either.
Yeah. Mm. How do you what's your thought process to identify something that needs a lot of money versus something that doesn't need a lot of money? I mean, there might be an e-commerce startup or anything else that, there's no big investments needed, but you could grow it faster maybe.
Hi. Hello.
Störe dich nicht?
Nein, wir sind in Interview, aber du kannst ohne weiteres da sein.
Ehrlich?
Ja, klar.
Ich bin ganz leise.
So how do you identify, how do you select these ideas? How do you say this needs a lot of investment or not? Because sometimes the answer might not be very clear.
Yeah. Well, the first thing is it a really big idea? I mean, can this thing go into the hundreds of millions or the billions or the whatever? I mean, that's the first question. If the goal is to be the world market leader of a small market, my first company, Compex, for instance, we were undoubtedly the world market leader of our category, but it was a 100 million market probably, and we're doing 20-30 million revenues. So that doesn't justify a big investment. You just need to figure it out. And a lot of the financing came from me doing a side job. Yeah. So I did a lot of consulting work and stuff, and those fees that were nice and hefty went into the company. Yeah. And that was good enough. I mean, I didn't need much more money. I mean, you would have thrown 5 or 10 million or 20 or 30, I wouldn't have gone any further, any faster. Yeah. So, and we did nicely at the end. I mean, the company was nice and profitable and growing, and we sold it very nicely. So, no problem. So it's really a matter of seeing if the size is big enough or not to justify that investment. And then, can the investment really make you go faster?
Does it help in the end, yeah?
Yeah, are you really going faster because you have 1 million or 10 or 20 or 50 in the cash box? Yeah. In certain cases, it's obvious. I mean, if you look at the biotech model, then it's obvious. You need some money, period. I mean, otherwise you will never get your thing going. Yeah. If you really want a drug development, not biotech in general, because you can do a service. I mean, there's been a few example of service-driven companies in the biotech that did extremely well for the founders, but with no venture money.
Yeah, that also works. Mm-hmm. Yeah.
So then, as if you can do it that way, I mean, find jobs and figure it out.
Right. I mean, definitely, if you can make it without investor money,
Better.
Yeah,
Sure.
because there's one boss less to answer to.
Exactly.
You already have the customers.
You have your wife, your customers, you have a lot of customers.
So exactly, it just adds up. It's way too
But
many.
in the moment when you decide you want to have venture money, venture capital money, or just investors anywhere, how do you detect a good from a bad investor? How can you?
As a founder, you mean?
Yeah.
Well, I think there's a few things you can do. I mean, you do due diligence. I mean, first of all, you have your opinion on the person. I mean, you rarely get money after 1 hour interview. So you'll see the persons a few times, and you can do the same than we do with startuppers. Do they say what they do? Do they do what they say? You can do the same with a venture capitalist, right? He promised me this and that. Did he do it? Did he not do it? Did he open doors? Did he act constructively? Does he understand what I'm doing, etc., etc.? Do I feel well or not with that person? And then you can call a few CEOs the venture capitalist has been working with and say, how is it to work with so and so? Is he constructive? Is he a true asshole? Is he nice? Is he hard? You'll find out.
Right.
Because pattern repeats themselves. So whatever you'll hear is probably not far away from reality.
No.
And it's up to you to know whether you can live with that or not. And then, secondly, whether you have a choice or not. Maybe it's the only one that made an offer.
Yeah. Yeah.
So
a few aspects there.
there's a few aspects to the story.
Yeah. So you mentioned in the beginning what you look at in the founder, and you just said now you do a check with, does he say what he does and does he do what he say? What do you personally look for in a founder so that it really feels
the ability
good?
to get things done? I mean, I try to have as much as possible a film and not a picture. I mean, obviously when somebody pitches you a thing for the first time, then it's a picture. And sometimes you need to act fast, and then you have to take a decision on the picture, which is difficult. What I try to do is to see those people a few times over time and write down. I take notes on everything all the time. Anything you tell me is written down somewhere, and I find it. So if I see you 2 months, 3 months, 6 months, 12 months after, you say, well, you told me this would happen. What happened actually?
Yeah.
And that's very useful.
Yeah.
Not that if it doesn't happen, then it's wrong, because often those things, the things don't happen the way they were planned or whatever. But the interesting thing is, what did you do in view of the fact it didn't work the way you thought? That for me is the important. And how does the entrepreneur react to adverse effects or to opportunities? I mean, it doesn't need to be negative; it can be positive too. I saw this great client, this great prospect, so we changed our focus on this. Fine. And what came out? So you look at the ability to get things done, to react, to move, etc. Then you look at the ability to communicate properly. I mean. Obviously, it's not only a communication job to be CEO, but you need to be credible. You need to be to attract people around you, be it employees, clients, investors, God knows what. Yeah. And each one has his style. I mean, obviously, the double PhD postdoc will have a different view and attitude than somebody coming out of a hotel school or whatever. I mean, because the genetic coding is different, and the education is different. But you need to have that ability to communicate, which I think is important. Obviously, endurance, courage, vision. There is a very interesting thing. Also, is the level of energy the same when you talk about the vision? Sort of, what do you want to do? I want to save the world because I'm going to find a cure to this and that drug, or to this and that pathology, or whatever it is, And it's very easy to be enthusiastic about that, and say, when that works, the world's going to be so much better. And you can tell beautiful stories around that, so that's easy. And if you switch gears and you say, and what are you going to do actually this afternoon? We're meeting now, it's 9 o'clock in the morning. What is the rest of your day? What are the other things you're doing? And if you see the same level of enthusiasm about the shit stuff he has to do right coming out of the meeting, it's good. So you need to have the same level of enthusiasm for the big idea than for the stuff you need to get done to make sure your vision comes to completion.
Yeah.
And that's difficult.
Yeah, I never heard that
It's
angle
difficult
before. Yeah.
It's very difficult. And you see that in certain people. You see that enthusiasm, and in some others you don't see it. If you don't see it, it's worth having a few questions.
Yeah. What if they're just quiet people?
Well, that's exactly that. But that's the ability to get things done. Then you say, if you've seen the person over a certain period of time, then you say, you told me you would do this, so that what happened.
Right.
That proof is in the pudding.
Yeah.
So,
yeah.
Proof is in the pudding. So it's
yeah, as you said, it's different aspects.
It's an unexact science anyway. So
right. Yeah. It would be, everybody would know how to do it then if it were science.
It would be too simple.
Yes, and not that fun. Is there any startup that you're missing on the market? Anything that you thought there should be something for that?
I think the big ideas, I don't know which one the next are going to be by definition.
Yeah.
By definition, if it was obvious, then there would be too many people trying it. So I think the next big idea that would be probably, I don't know what it is today, and I think that's the right way.
Yeah.
I think if you think of, I'd like a better service for this or that, that's incremental. It's not going to make you a 10x.
That's true.
Probably. Obviously, there's a lot of things. I mean, I just traveled back and forth in the US last week. I'd love to have an airline that manages the service from door to door, not just in the airline. The security checks and this thing and the rubbish in the hotel. But okay, that's incremental. I don't know who can.
Yeah.
That's sort of a little bit better, a little bit faster, a little bit cheaper, a little bit better value for money. That's not going to create a big startup. The big startup is really somebody coming with and disrupting something big time.
Yeah.
And I think by definition it doesn't.
It's not something super visible.
No, by definition I think.
Yeah. Yeah.
By definition. Catch you a different angle.
Yeah. All right.
Ich lass mich gerne überraschen, as you say.
That's good. Oh, it keeps the game exciting.
Yeah, exactly.
If you have that approach.
Exactly.
And not assume you know what's next.
No, that's for sure not.
Yeah. Well, thank you, Michel. Do you have any other questions that popped up in your mind?
Pleasure, guys. Good
Thank
luck
you
on
so
your
much
mission.
for taking the time. Really,
pleasure.
really nice conversation.
Take care.
You too. That was it. Thank you for listening to another episode of Startup Stories. Make sure to check out the show notes with additional links at nerdentrepreneurs.com. And if you like our podcast, leave a review on iTunes. Cheers!